Hey everyone, we've been beating the drum about that we want to be long financial stocks, the financial sector in this environment, and we've received a lot of inquiries over the past couple of weeks or so, asking us to give a bit more color as to like why that actually is. I mean, we talked about kind of the broad environment and the relative strength, all that kind of stuff that's happening, but I have one specific little nugget, and I'll have a visual on this that is going to, I think, make it quite clear as to why that's interesting. One of the things that's important to understand is when you look at financial stocks, particularly the banks, but also other players in that field, is that they will make more money as a yield curve steepens. I have to do it this way in the camera. And the reason why that's important is because they tend to borrow on the short end and kind of lend out a bit further out in the curve. So the steeper, the more the spread is they can make between where they raise money and where they actually make money, right? Um, I'm going to have a very compelling sort of display on this for you in just a second, but let me just start with a couple of more broader charts to kind of get us into the mood to be bullish this part of the market. I'm going to start out with a relative chart. We always like to look at things in relative terms as well as in absolute terms. What I did here is very simply I took a long-term chart and I made it a ratio chart. I took the financials, I took the XLF ETF, and I divided it by the SPY ETF. And what you can see is that since the financial crisis of 07, 08, 09, we've had basically a lack of any relative strength. In fact, we've had a lot of relative underperformance in the financial space. Some of that is due to the regulation. Some of it is due to technology, and some of it just you can say that the former leaders are going to be sort of the new laggards for a while. But I think we may be coming out of this. On the regulatory front, that's one thing. You could argue there's some things that are happening that are positive. On the financial side, a lot of these companies are becoming acquisitive. They're buying, fintech companies, so they could actually be very well. They are very well positioned to be part of the new world as well. So from this perspective, you can see the chart basically speaks to a potential breakout to the upside in relative terms. In absolute terms, we can look at, for example, the XLF, and we've already seen a nice move, a nice breakout basically in February of this year, but we think there's a lot more room to go. But let's talk a little bit about, before we look at some individual equities, let's have a look at this interest rate situation. This is that chart that I mentioned that I wanted to show you that I think is so compelling. And this is that interest rate differential that I was just saying, right, where particularly the banks, but also other financial institutions, the steeper the yield curve, the more money they can ultimately make. And you can see what the forecast here is, according to this, is that we get back to an almost 2.5% sort of difference between the shorter end of the yield curve, like the 2-year and the 10-year. And that is going to be a fundamental, a driving force for these companies to be doing well and have like sort of a higher sort of base level of income, and that really should be driving the equity price as well. So this is really what, for all intents and purposes, should be driving this to the upside. Now, individual equities here we can kind of it's almost like kind of like shooting fish in a barrel because they're all going to profit from this. But you look at something like Citigroup, without drawing too many annotations, you can see, in some of these are older annotations, so you can ignore those. You can see if we can start to overcome, $78, that would constitute a multi-year breakout. Something that's a bit more even clearer here on the near term is something like Prudential, which we actually really like. PRU is a ticker symbol. This is the weekly chart. I'm going to make this a daily chart so you guys can see this a bit more closely. For those of you that are using our Market Rover, you might also note that the Market Rover actually has this stock bullish trend and on the verge of breaking out. The ticker symbol PRU. So just a couple names there to give you some color. So hopefully this has been helpful. If you have not been aware of that whole interest rate differential, that yield curve play, that's so important for these institutions. Now hopefully you are. If you have any questions, let us know, and we'll see you in the next video. Hope it helps.